morning, good evening, good afternoon, traders all around the world. This is Hello George. Hello George, how are you? This is FXPassion broadcasting you live on YouTube. And this is Forex Trading Course 101. Remember everybody, the three pillars. We are trying to build a strategy or a system. We need to have an edge in the markets. We need to understand and apply risk management rules. And in the end, the big one, the psychology or the mindset of the trader. Yes, we finished. Yes. Hello Joshua, how are you? Yo. Yo. Happy Monday everybody. Remember, 90% of traders lose money in the Forex market worldwide, and there is disclaimer, the webinars are not investment or trading advice. The webinars are for educational purposes only. Don't trade with money you cannot afford to lose. That being said, oh, one more thing. So we are out. We finished the basic module. Okay, we are not going to get back. I hope that you have learned and understand market structure, highs and lows and trends, because starting from today we are in the beginner module. So we are going to talk about trend line, support, resistance, pivot points, and candlestick formations. Okay, so that being said, let's see, let's open some charts, right? We need to open some charts, not this one, that one. And the title of today is how to find trading opportunities using the counter trendline breaks, right? Okay, great. Who in here, everybody? Who in here? Or do you think that trading is difficult? You know, oh man, trading is difficult. Okay, it's complex, right? It's difficult. Who in here thinks that trading is difficult, right? Oh man, I cannot win this game, you know. Oh, I tried for 5 years, 7 years. Right? What if I tell you that trading is not difficult? Okay, you just need yes, you just need to learn it in the right way. Okay, so if you're a beginner trader, we are going to upgrade your knowledge, and we are moving from the basic to the beginner. Okay, and we are going to use the lesson today. Okay, so to find opportunities, you need to find two things, everybody. Number one, structure, and number two, short-term trend in the same direction. Just this. Okay, and we're going to check the live market. Hello Max. Trading is difficult. Yes, not for you, my friend. You have the crystal ball, right? Okay, so to find opportunities, you need to find what? Number one, structure. Okay, so if you're a beginner trader, try to find, or not this one, try to find or a down structure with a downtrend, with a short-term downtrend, and we're going to color code it like this. Okay, so try to find, if you want to make some easy pips, right, nothing too complicated, then you need to find a down structure. Okay, and you need to find a short-term trend in the same direction. Hello Annie, how are you? And when you are going to find a down structure and you are going to find a downtrend, you are going to apply, everybody, what is called the counter trendline break. Counter trend lines. And this is what we are going to try to identify. So counter trend line, you know, counter trend line. And if you're thinking, oh, passion is just this, yes, it's just this. You don't need Fibonacci, and you don't need Ichimoku, and you don't need moving average crossover, and you don't need stochastic, and you don't need RSI. This is for the beginner trader, right? Oh, trading is complex. Yes and no, right? If you understood the structure and the short-term trends, now trading shouldn't be that difficult anymore. Okay, so this is all you need to find a trading opportunity, everybody. Okay, and the same goes in an uptrend. You need to find an uptrend, right? And you need to find a short-term uptrend. And if you don't understand, or this is your first time, everybody, that you are with us watching these webinars, please go back on lesson number 1, because you need to learn. You need to learn and you need to understand what is structure, what are the rules of the structure, and you need to learn the market wave, what determines an extension, what determines a retracement. And here you go. So counter trend line, multiple opportunities, counter trend line, right? Counter trend line, again counter trend line, again counter trend line. Okay, this is all that you need to make some easy, not complicated pips. Okay, if you're a beginner, of course, this is all you need. Any questions so far? Any question? And remember, everybody, I have a 20 seconds delay on the chat. And of course, now what is a counter trend line? A counter trend line, so let's put this. If you have an uptrend line going up, and you have a short-term trend, let's say, the counter trend lines are going to be trend lines that are going in the opposite direction. So if you have an uptrend and the market is moving up, making higher highs, higher lows, the counter trend lines are going to be the downtrend lines. How many counter trend lines are there on average in structural trend? George, my friend George, stop with the statistics, man. Stop, my friend, I'm telling you. Or how on average, you know, and risk reward on average. And George, there is no right or wrong. Okay, nobody knows, because the market is a moving organism. In which counter trend line should I enter? On every counter trend line, all of them. Okay, don't get offended, George, I'm playing with you. Okay, so in a downtrend, right, you have a downtrend line like this, and you have the market making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So the counter trend line goes in the opposite direction like this. So this is going to be one counter trend line, second counter trend line, like this, you know. Okay, yes, okay, I'm joking. Yes, I have another platform, everybody. For you who are on YouTube, you are not seeing all the questions and the answers. There is some student asking about mathematic approach, and yes, you cannot, everybody, you cannot quantify all the things. Okay, you cannot quantify all the things, not in the Forex market. How will we know when the counter trend line is broken? Joshua, we're going to address this, but you need, if this is your first time, please watch all the webinars starting from number 1. Is there some sort of confirmation to look for? Yes, there it is. Yes, there it is. But as I said, we are not going to move back on the basics. Okay, so this is theory. Okay, so we're going to open Euro JPY chart. Euro JPY chart. Okay, now let's go first on the daily chart. Euro JPY. Okay. So this is Euro JPY daily chart, and as you can see, everybody, the market was in an up structure, right? The market was making higher highs, higher lows, higher highs, higher lows, right? Higher highs, higher lows, higher highs. Okay, there you go. So this was from the daily, this was the up structure, and in some point in time the market broke our uptrend line. Agreed? Color like this. Do we agree on that, everybody? That the market was in an up structure, it was making structural higher highs, higher lows, and then in some point in time we drew the trend line. What is a trend line? Trend line is a tool that confirms the trend or the structure, and in some point in time the market broke our long-term up trend line, right? We learned that we have different trend lines, so this is the medium term. So we are here right now. Agreed? Suppose your drawing has a time frame of 1 hour. Can draw the day 4 hour structure in the same draw? Yes, you can. Yes, you can. Yes, you can. Okay, so we agree on this now. So the up structure is over, the up trend line is over. We are going to delete this, and what we are going to do? We are going to do this. We are going to draw a long-term downtrend line, right? And we are going to zoom in. And we are going to draw structure on the daily chart. So extension, retracement, extension, retracement, extension. Okay, you need to know, Joshua and everybody else, you need to know how the market is moving, what is the market wave. You need to learn the rules. The most important rule when you draw a structure or a trend is that by rule retracements must not be bigger or longer than the extensions. Okay, so this is theory. To find opportunities you need to find structure, and not 3 but 2. Number 2 is the short-term trend in the same direction. So the red is structure, and in here, right, the market was making higher highs, higher lows, higher highs, higher lows. And Joshua, I'm going to explain to you just in a minute or two. So the market is making higher highs, higher lows, higher highs, higher lows until here, right? And we are going to color code this in green. And then the market ended the retracement and started making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? Until here. Okay, do we agree on that? That this part was the retracement, right? The quadrant was the retracement, and then the market reversed and was not making any more higher highs, higher lows, but it started to make lower lows, lower highs, lower lows, lower highs, right? Okay, Joshua, when you have extension, retracement, extension, you are going to see, how do you know when the retracement is over? You are going to see short-term trends, okay, and you are going to see that the market is going to change the short-term trends. You are going to see always this. Sometimes the retracements are going to be a little bit wider, okay, but you are going to see when the retracement is over, when and where in a downtrend the market is going to change. And let's color code this in black. The market is going to change, is going to make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then it's going to change trend, short-term trend direction. So it's not going to make any more higher highs, higher lows, but it's going to make lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Okay? When you see, and this could be the 5-minute chart, could be the 15-minute chart, could be the 1-hour chart, 2-hour chart, daily, monthly, weekly, it happens all the same, with the same rules. Okay? So, we learned this, right? Extensions and retracements and the relevant highs and lows are the borderlines when you are going to have change in the trend direction. Okay? And if you want to learn more, I'm sorry to tell you, you need to go on the Stohastic YouTube webinar page and start watching these videos over and over and over again until you understand how the market moves, right? How the structure relates to the short-term trends, how the higher time frame controls the smaller time frame, and all of this stuff. So, number one, to find opportunities, you need to find number one, structure, number two, short-term trend in the same direction. So, of course, when you trade, right, when you trade, you don't have the crystal ball. When you trade, you don't have the crystal ball, and let's see that we are here, right? This is Euro JPY daily chart. I mean, Max has the crystal ball, we don't have it, okay? So, let's see, this is the chart, and, okay, let me correct. We don't see the right side of the screen. Okay? So if you're a beginner trader and you just draw structure, right? And you are monitoring the market. You are monitoring the market and you are seeing that the market is not making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs anymore, right? But you are seeing the market making higher highs, higher lows, higher highs, higher lows, higher highs. Should be this low, right? Okay, something like this. Now let me correct this. Let me correct. So higher highs, higher lows, higher highs, higher lows. Right? So the orange. So yes, there is a learning curve attached to this. You need to train yourself. In the beginning it's going to be a little bit difficult to spatially see. But the market, when you are trained enough, and trading is a learnable skill, you are going to train yourself to see that the market was making lower lows, lower highs, and then it's not making lower lows, lower highs anymore. It's making higher highs, higher lows, higher highs, higher lows. Right? Passion, when we start something new. Today is something new. Great, I have the basic down. I was just making sure we are on the same page. I'm following you. Okay, thank you, Joshua. I'm at night. Can you repeat all this? I'm at night. Not sure what you mean, my friend. Okay, so we are here, right? And we need to find trade. We want to make some pips, right? We want to buy our first bicycle with the money. So we want to find structure and the short-term trend in the same direction. Okay? Question: is the short-term trend going in the same direction as our structure? Passion, can I go long in here? not as a beginner trader. Okay, not yet. Not as a beginner trader, I wouldn't suggest you to go. I mean, you can do anything you want, no problem. But if you're a complete beginner, oh, but this is the daily chart. Yes, but you can go on the 2-hour chart. You are going to is the same principle, everybody, the same way of doing things, the same way of thinking. Okay, the daily is just an example. It happens on all time frames. Victor says no. Hello, Victor. Yes, it's not such. I mean, if you are a semi-professional, okay. If you are professional, of course, you can go counter trending, right? But if you're a beginner, just wait, right? You don't need to go on the daily. You can go on the 2-hour chart. Just monitor the market, and I'm going to delete this because we don't have a crystal ball when it's time to trade. So this is my uptrend line, which is measuring the retracement, right? And I'm waiting. Okay, and we are here right now. So low and another higher high, still a higher low. Now everybody, is the retracement over? Okay, I'm trading, right? And I don't have the crystal ball. I know the rules between extensions and retracements, and I see that the market broke our uptrend line. Question: is the retracement over in here? How do we know that the downtrend is finished at February 1, 2019? Because of the change. Great question, George. Because of the change in trend direction. Okay, the market is not making any more lower lows, lower highs, lower lows, lower highs, green line, George, but it's making higher highs, higher lows, higher highs, higher lows. Okay, retracement not over, not hit at low. Hello, oh Arturo, long time no see. So we learned what is a confirmed trend, right? We need minimum 2 lows relevant, minimum 2 lows relevant, and minimum 2 highs relevant, where the second low and the second high is lower low and the lower high. Do we have this on the right side? And again, this could be any currency pair on any time frame. This was not clear on February 1, it is now. How? Because we see all the future. Okay, we're going to get back later, okay, George? It's the same way of doing things. It's the same way. Just look at the short-term trend, okay? And you are not going, of course, George, you are not going to see on the day, right? You need to wait, you need to monitor the market. But as soon as possible the market made a higher low, George, then this is an indication, right? And this was on January 15, so you would need to wait for 15 days and you're going to see a higher low and a 75 up structure. But you are not going to see this on the first day, okay? And it's the same, everybody, as in here, right? The market broke the uptrend line and George is saying, well, you don't see this, correct? You don't see, you don't have the crystal ball. I don't know what that moment this, okay, the last 2 candles say it. Well, number one, we don't have a lower low, right? The market just broke the uptrend line, but we don't have a lower low. You need to pay attention, everybody. Sometimes the market is going to break the trend line, but is just going to switch channels. Okay, it's not enough the trend line break, but okay, right? This is an indication that maybe, just maybe, the retracement is over. So we are going to wait. Okay, there you go. Now, George, similarly as in here, that where you had a higher low, as in here you have a lower high, right? So now something is telling me that maybe, I don't have the crystal ball, but maybe the market is ended the retracement, right? It's not making any more. The market should do what? The market, in order to continue, should do higher highs, right? Higher highs, but it didn't, right? If the uptrend is to continue, it must make a higher high prior to the relevant high on the left. Okay, everybody? If it's not clear, write in the chat. Passion is not clear, or passion I still don't understand. No problem. Okay. Anyway, the market, in order to continue its uptrend, should make a higher high, which it didn't, right? So we have a relevant high, relevant low, relevant lower high. Is our downtrend confirmed? Short-term downtrend? Is our short-term downtrend confirmed? To find opportunities, you need to find number one structure. We did this short-term trend in the same direction. How to confirm a trend? There are some rules. We learned about this. So the question is, are we in a confirmed downtrend? On Euro JPY daily chart in here, right? No, we are not. We are waiting for another lower low. So we are going to monitor the market, and bam, now we have another low. There you go. We have a confirmed downtrend. We have a two lows and two highs. Let's call this in black. We have two lows, two highs where the second high and the second low are lower lows, lower highs. Am I breaking any rules doing this stuff in this way? Am I breaking any rules? Am I breaking any structure? Am I breaking any trends? Am I breaking any rules how to confirm a trend? Am I breaking any rules how the market waves? No, right? Everything is in place. I'm just monitoring now. So now I have a confirmed downtrend. Okay, so I'm going to assume. Why assume? Because nothing is 100%. And as George said, we don't have the crystal ball. I'm going to assume that the retracement is over. Passion, how do you know that the retracement is over? Well, again, the market was making higher highs, higher lows, higher highs, higher lows, and then the market was start to make lower lows, lower highs, lower lows, lower highs, right? So if this was the case, I would just wait and now try to identify the counter trend lines and enter the market. Can we say the same on February 10? There is a small up followed by a downtrend. Can we say the same on February 10? February 10, where is February 10? January, February, January, February, 5, 6, 7, 8, 9. February 10. Small up followed by a downtrend. I don't see a downtrend, George. I don't see a downtrend. I don't see your downtrend. Oh, you mean this maybe? Let me see if I... So this and this and this, like this. Like this. Is this that you are referring to, George? The green? Is this? Are you referring to this one? Okay, I'm going to wait your answer. If your answer is yes, George, remember you need to monitor relevant highs and lows, because not all highs and lows are relevant. Okay, you need to know that what is structure, what is the short-term trend. Okay, well, even though you don't have all the knowledge, okay, and even though you can, if you want to speculate, right? You want to speculate, right? I'm not sure that, let me see. Okay, you want to speculate, right? And high, low, okay? On the next, what happened here? Let's say that you would speculate, right? That it's a downtrend and down. What happened in here? Okay, what happened in here? Come on. What happened in the circle? What happened in here? Yes, higher high, right? So, but you wouldn't, George, when you learn relevant highs and lows, you wouldn't draw this, okay? You wouldn't draw this. But okay, it's, of course, everybody, there is a learning curve, don't get stressed out, right? You need to train and train and train, okay? Okay, let's go. So we are here right now. Okay? And George, of course, I'm here, right? I have a confirmed downtrend, but if the market would make another higher high, like in here, right, I would lose money, of course. Okay, I'm going to short the market, but the market is going to make another higher high, right? Then I would say that this was a false downtrend, right? The uptrend is continuing. Okay, now this is the market, and let's wait. So I want to enter counter trend lines. One more rule. Text rule. It's a rule. You can draw a CT, stands for counter trend line, on minimum 3 candles. Okay, you need 3 candles in order to draw a counter trend line. So I'm going to delete this structure, and let me see, 1, 2, 3, right? So this will be the first counter trend line. Okay, and let's talk about trading a little bit. We are going to apply one rule. This rule is just an example, okay? And no, it's strategy. Let's call it strategy. It's not a rule. Strategy. When entering the trade, we are going to put our stop loss above the previous high. Okay, just the stop loss. We are not going to talk about the take profit, but this is our way. As a beginner trader, I'm going to enter at counter trend line break, and I'm going to put a stop loss above the previous high. Okay, I don't have the crystal ball. I'm learning, right? I know that these webinars are not investment and trading advice. So let's see. Okay, trade number 1, we are in. Okay, my stop loss is up. I have another counter trend line in here. Okay, let's color code this in black and like this. Okay, I need to see a counter trend line break, so the candle must break the trend line, so not in here. Okay, maybe in here. Didn't break. Okay, still in here. This is the second counter trend line. I'm in a trade. Okay, almost hit my stop loss. This is my counter trend line, and bam, I'm in. The market broke. So this is my first entry. This is my second entry, right? Stop loss goes. This is still the second, right? So I have two stop loss here. Okay. Let's see, the market is falling, and 1, 2, 3, right? I need to see a counter trend line. Bam, I'm in. This is the third trade. Third trade is in here. 1, 2, 3. And everybody, don't put your stop loss exactly on the candles. If you put the stop loss exactly on the candles, you would be stopped out in here. Okay, make it 15 or 150 pipettes higher. Okay, because sometimes the market likes to gravitate to retest the levels. Okay, so we are here, and my previous high is in here. Okay, so I have two stop loss levels in here. This was my first trade. Okay, this was my second trade, but the previous is still here. Okay, so this is my third entry. Do you need a confirmation time frame? Yes, you need. But today we are learning, Arturo, a technique how to spot trading opportunities using the counter trend lines. Okay, this is what we are learning today. But the answer is yes, you need a confirmation time frame, of course. And the market is falling. 1, 2. Okay, no counter trend line here, just two candles. The market is falling. 1, 2, 3. Okay, counter trend line in here. And where is my previous high? My previous high is, I'm going to clone. So I entered here. This is not a high, so this is my trade number 4. Okay, I'm a beginner trader. I don't know anything about Fibonacci's and Ichimoku and Bollinger Bands and Elliott waves. I don't know nothing about this stuff. I know structure, trends, and trend lines. And let's see, 1, 2, 3. Okay, another opportunity. Right, let's see, need to see a counter trend line break. Let's see, bam, I entered here. Okay, now, so I entered here, stop loss on previous high. Well, this is not a high, so this is not a high. Again, I have two stop losses in the same area. And again, let's see, market is falling. 1, 2, 3, minimum 3 candles. Another opportunity to enter the market. Didn't break the counter trend line. I'm extending, right? Extending, bam, I'm in. Right? So I have 1, 2, 3, 4, 5, 6. This is the 6th opportunity, and my stop loss goes on the previous high. So this is the high of my trade. Previous high is up in here, right? And let's see, the market is moving up again. 1, 2, 3. Another counter trend line if you want. Another trade. I'm in, and my stop loss goes up in here, right? And the market is moving up, and maybe hit my stop loss in here, right? Okay, I have a loss. Okay, there is first loss. lost. Okay? Passion, you lost! Yes, I lost, and you are going to lose too. Everybody, losers are not losers, losing trades are part of the game. You need to make it okay. But as you can see, we are winning. 1, 2, 3, 4, 5, 6. We have 6 winners, everybody, and we have 1 loser. Writing here, right? Losing trade. Okay. $1 billion question. Why did I lose in here? Why did I lose in here? You need to spatially see this one, and don't worry, there is a learning curve. Why did I lose? Why did I lose in here? What do you think, everybody? Why did I lose in here? Who knows? And this happens on all time frames. The same strategy, the same way of thinking, the same way of analyzing. Could be the 15-minute chart, the 2-hour chart, right? You just need to find structure and the short-term trend in the same direction. In this example, it was the down structure and the down trend on Euro JPY daily chart. It could be an uptrend with an up structure, right? Structure is up because you... Yes, sir. Congratulations, Max. So, if you are going to compress the chart, right? If you are going to compress the chart, and we are here now, and I am going to put a downtrend line like this. I'm going to remove this. Remove. Let's color this in black and like this, right? Okay. Now I have an up short-term trend, right? So this would be the medium-term trend line break, right? Now, when you are here, everybody, change. Yes, maybe, but we learned so far that retracement must be shorter, right? Extension must be bigger or longer, if you want to use another word, than the retracement. So our extension was here. This is our extension, right? This is our extension. Okay. Now, when this happens, of course, the market can do anything it wants when it wants, right? Okay. Now, if this is here, you have two things. Number one, is the extension over? Yes, we have a short-term up structure, short-term uptrend maybe, yes. But the question is the extension over? If this is the extension and this was the retracement, in here. The question is, I lost, yes. I have an uptrend, yes. Short-term, yes. I have two lows and two highs where the second low and the second high are higher high and a higher low. Yes, I have. But is the extension over? Is the extension over? It's not, right? So the market, in order to wave, it must make extension, retracement, extension, retracement. And this is structure, technical structure of the market. The market, in order to wave, it must make, after the structure retracement, which is this one. Okay, this would be the structural. Let's color code this in red. Okay, this is the structural retracement. In order for the market to wave, it must make an extension, meaning even though this is a short-term uptrend, in the end the market must push lower. It must make a lower low structure. No, only if there is a higher high it will be over. Maybe yes, maybe not. No need to check further time frame and check long-term trend. Okay, yes, but we are here. We want to clarify first this. So when this happens, there is no right or wrong. What would I do? I would pocket all my counter trend line entries that are in profit. Okay, I lost one, so I would cancel everything. Okay, I would go out. So out of the first trade, second trade, right? Out, because I know that the market can do anything it wants. I would close all my trades. Close. Why is that? Well, I know that the market can go until up in here, right? The market can wave up until in here. This is the long-term downtrend line, which the market must respect in order to continue its down structure. Come on. Okay. So the market, I know that the market can go up until this uptrend line. So, and I don't have the crystal ball. So I'm out. I lost one, right? I won 5 or 6. I lost one, and I'm going to monitor the market now. How to think as a beginner trader? The market is going to go up, right? So we are here and the market just did, I need to buy another mouse. So this was the downtrend and the market just did this, right? Now I know that the market can, and let's move it a little bit like this, like this, like this, like this. Okay, we are here. Now I know that the market can push higher until the long-term downtrend line. No problem, I'm going to put a counter trend line like this if it's going to continue, right? And by the rule it must fall again, because it didn't make the extension yet. The market, by rule, if the structure is going to continue, it must fall below this point, right? Structure, lower lows, lower highs. Market wave extension must be bigger or longer than the retracement. So or the market is going to go up and I'm going to build my other counter trend line, or the market is going to make another lower low, is going to break this counter trend line and is going to continue. Okay, and as George says, we don't have the crystal ball. I'm going to delete, right, delete. Okay, delete this one, not relevant anymore. Let's zoom in, delete. So we are here right now. So this is my counter trend line. Okay, everybody, is it clear to you why I'm going short again? Is it clear why we are going to short again? Because you could be thinking, oh, Passion, it's making higher highs, higher lows, let's go long. No, I'm a beginner trader. I want to trade in the same direction with structure and the trend. I don't want to go against the trend or against structure. I'm a beginner trader. I want to trade in the same direction as structure and the short-term trend. Okay? Is anybody in here who does not understand why we are going short? There is a short-term uptrend. Why are you shorting the market? Okay, You are my teacher. Teacher Max, Teacher Annie, Teacher Joshua, Teacher George, Teacher Victor. You are my teacher. Teacher, why are we shorting the market? We have an uptrend. Isn't this risky? Yes, because the biggest trend line is going short. Yes, this is one. What else? What else? There's one more reason why we are shorting the market in here. One more reason. What is the rule between extension, retracement, extension, retracement, extension? One more rule. Yes, exactly. We are shorting the market because, as Victor said, because the biggest trend line is still short, it's a downtrend, but also because, more importantly, the market didn't do another extension, right? So if this would be the example, this is the example like this. Okay, so this is the extension, this is the relevant low, this is the low of the extension. So in order for the market to wave and to continue its structural downtrend, the market must push lower and make a lower low structure. We wait until it goes down also in short term. Yes sir. Extension should be shortened than retracement. No, extension should be bigger than the retracement. Okay, so I don't know what is going to happen. Let's see. Let's see. Bam! The market broke my counter trend line, right? And as you can see, everybody, sometimes the counter trend line is going to be like this. Sometimes the angle is going to be almost flat, right? You have different angles for different time frames. However, the market broke our counter trend line, so we are in, shorting the market again, and our stop loss, right, is not this one on the break, but the previous one. Okay, there is no right or wrong, this is just a technique. So we are in the trade. Hello boss, how are you? Yanis is our boss, everybody. Yes, 3 more minutes and then I'm out. But the extension sometimes stops, so we get profit from all except the last before reversal. Yes, nonetheless, the market must respect the extension in order to wave. Hello boss. Okay, so we are here and let's see, the market's moving down. Again, we're just repeating the exercise, another counter trend line. Second trade, right? Our stop loss, one before, like this. There you go, one falling, 1, 2, 3. Like in this, and not a trend line counter, not a counter, yes, right now. One more. Okay, so we are here right now. This was our last entry. And we are going to continue to short the market on Euro JPY. Homework, everybody, until tomorrow. Homework. Find trading opportunities with counter trend lines. Okay? Your homework, everybody, until tomorrow is to find trading opportunities with the counter trend lines. Okay, could be any time frame, could be any currency pair, no problem. Okay, everybody, stay strong and trade with passion. This is FXPassion signing off.